Ira Epstein of Linn and Associates with your metals market wrap-up for this Monday, the 16th of September, 2019, and here we are after 4:30 p.m. Central Daylight Time. Now, if you take a look at what's going on, we had a nice rally in the metals. The problem is, was it enough? You know, you took out one of the world's largest refineries and oil producers, 50% of their production. And this is all you added was $12 in gold. I would have thought 30 or 40 was a number. I know you think that's crazy, but that's what I would have thought. And because you could be talking war if were these missiles or these drones, I don't even know what they were that attacked. We keep hearing cruise missile, jet-fired drones. We hear regular drones. We hear the Houthis in Yemen are taking the responsibility, yet the drones were Iranian-made, which we understand. They're supporting those people. But then where they came from doesn't match up with Yemen, we think. We don't know the whole story. And I think that's what gold is telling you. We don't know the whole story. Silver market up a bit today, which was interesting because it's outpacing the gold market to the upside, which is part and parcel of what I'd expect if you're going to have a bull market. But I'm a little concerned with what I'm saying here. I would have really thought, I've been around this, 5 decades, you get a movement like this, I think you'd ask most people that have traded gold as long as I have, $12 isn't what I was looking for on a closing basis. So in looking at the chart, yes, the bias is still up. Yes, the pattern is still bullish. When we look at a daily bar chart, this isn't so bullish. I know you want to hear different. Take the name off the chart. What's so bullish on this? Take out these lows right through here in this 1492 area. I'd be nervous about the long side. It could drop more. So I know what I was telling people is to my gold update that had read it or that subscribed to my information, they got a writing from me about this today. I'm not going to tell you what I said. When we come to the swing line in the gold, you have the pattern lower highs, lower lows, pausing here. I could also argue that this 1492 area here that was hit is got a pattern of higher lows and lower highs. I can live with that. So you're narrowing in like this. Here's what I think. In order to give confidence to those on the chart that want to be bullish gold, I think you got to get over this 1532.20. To give the bears confidence, take out 1493.10, and they'll say, what can you do to me? You've already had a situation. I guess all-out war can happen, but barring that, why am I up here? That's one of the questions. I'm also bothered that a day like today, the market didn't even make a run for the 18-day average of closes at 1525. So I'm bothered in the gold market for the time being. I've given you what could turn me back on, and that's all that you can say is getting over the 1532 area. Yes, hitting the 18-day average would be nice, but you really need to take that number out to feel good about the market. The one thing I did right is I certainly told people where I thought the first support would come in, and I was pretty right on that gold report, which as I understand, it's off now on the website. You had 5 days to look at it. In the Bollinger Bands, you had gotten down to the band. That was the first challenge of it, and that was part of the support that I saw. You got back up right afterwards 2 days later to the 18-day average, and you've stalled. If I take you back here before the weekend, this was last Thursday, and I were to tell you that half the Saudi oil refinery capacity was going to be lost in an oil field hit, drone attack, would you think that gold would be hanging here or be higher? That's what you got to always ask yourself. And I'm bothered by that. In the slow stochastics, you're oversold. So we have a market that even if it gets under this 1493.10 zone, it's going to have to embed to get me excited about being bearish and thinking maybe there's something down here the market can go to. It's not there. It's just oversold. And I consider today still the bears have control of the market unless the market gets over 1532.20. I know you don't want to hear that, but that's what it is from my perspective. In GLD, bears still have control. Oversold market, admittedly. Unlike the futures, both numbers are under 20 on momentum. Let me just get back here and see if I can get that to move. Here we go. They were both under 20 on Friday. If they're both under 20 again tomorrow, you've changed the momentum to locking it in bearish. So we have a Tuesday possible reversal in the market. We had an update today. Caution. I know that because of Saudi Arabia, so many people are looking at this market saying, well, but I'm still saying to you, up $1. That was it. And you got up to 142. You didn't get that high on the whole rally, and it wasn't that strong. GDX still in the bear camp. So lower highs, lower lows, momentum trying to embed. I have caution here. When I come to the gold-silver ratio, you had been up, as you can see, to 85.35 on Friday, and you gave back today, closing at 83.85, back under the 18-day average of closes. So I think that we could argue that these attacks back of this number are sort of faltering, and the result has so far been silver gaining on gold. When you look at the silver, it's not as pretty either as what you'd expect. You still have the pattern of lower highs, lower lows, which is bearish. The market could not get up to the 18-day average of closes, even with an oversold condition from Friday. That's bothersome. If this market lets go of 1747, are you going to 1700, the lower Bollinger Band? I don't know, but that's the fear. If you're trying to be bullish that's the fear. If the market gets over 1855.50, I think this phase of the correction is over, and we put back into play the potential of upper Bollinger Bands. Who's controlling the market going home? The bears again. In copper, we had an outside day down. Now, I'm going to come back to what I teach. The first challenge of a Bollinger Band is often where pros come out, but the first challenge, if they both are hit, is a strong resistance area. That's all that I'm saying. You can see on Friday, you closed over both, and today you made the higher high right back under them. So we have a valid resistance point. The chart action, you are right here with momentum trying to turn back down. Now, if we look at it, today both numbers over 80. Both numbers were over 80 on Friday, and both were over 80 on Thursday. So you have a bullish embedded reading where you close by the low of the day. When you reopen tonight, the odds are in favor of this market dropping back the momentum, the slow stochastic, which could mean the 18-day average comes back into play. We know the resistance. Now the question is, does that come back into play? In the platinum market, the market got under a previous low. This phase of the bull market ended. You actually ended back here, and I think you can see. You started getting this pattern where you couldn't get up again, and now with today's break, you're out of that uptrend. I'm not saying you're in a downtrend. You've lost the bull pattern. And today was a major warning signal in palladium because you have a big outside day down and you've had 3 days of distribution against the upper Bollinger Band. The good news for the bulls is that you have the embedded reading. The bad news is the outside day down, and I think by the end of the day, some of the pros probably took money off the table as they saw the market was down with that outside day. They might consider what happens if the market takes out today's high, but it'd be right into the Bollinger Band. I'm going to stick with what I said. Will they buy if you keep the embedded slow stochastic in place? Probably, until that's lost. The question is where. In the dollar index, how many times do we have to hit this 18-day average for you to understand that's where markets fight battles? 1, 2, 3, 4, 5, 6, 7. What is it, 8 days? And whipsaws, vicious whipsaws in between. There is no trend yet in the dollar index. This market, I think, is going sideways. We talk about the metal markets and so much more in our Linn research. Now, I coupled the Linn research with my own writing. So if you're going to sign up for a free trial to this, if you haven't seen my own writings, you might want to do that at the same time, because I really dive into the financials in a large way for the firm. And metals are certainly one of the things that I talk a lot about. I wish I was right more than I am, but it's the way it is. You know, if you're a futures trader, you're as good as your last recommendation. I liked what I did in gold on the gold report. I thought that made sense, and I like what I wrote about it today. So you get to see that. How? Well, you can either call us to get a free trial. If you haven't tried it before, I'm not going to keep giving free trials. That's a guarantee. You can go to our website. You'll see right off the bat, sign up for the free trials. You'll see them all there. The same thing right here. Go for them it that way. I'm Ira Epstein. You have yourself a good day, and I'll talk to you all tomorrow.